traders, welcome to the TMT Stock Market Strategy video for Tuesday, March 1st, first day of the month. We have jobs coming out, job numbers, non-farm payroll coming out on Friday, which is always the first Friday of every month. It's going to be interesting to see what happens. We've had a couple of interesting days, Friday and then yesterday. We had a move up, and then we had a reversal at the end of the day where they sold the markets down. And now we're back up again in the pre-market where we have the Dow futures up 126 and the ES up about 15 and a half handles. So crazy, crazy stuff. Volatility is here. That creates opportunity for us. So embrace it, guys. This is something that we'll be looking for. If you remember, 2015 for the first 7 months or so, maybe January, February was great, but from March all the way to July has been really just sidelined. We were just in a range. So it was very boring type of trading. But now the volatility is here, so let's embrace it. All right, so what do we have here? We have the McClellan Oscillator, which is at the 68%. When you get above this 70, you start looking for some sort of a pullback or reversal. And you can see up in here when you get 70, 80, 90, which is really nice. And you can see that with our Bollinger Bands, really, we're not outside of the bands as of yet. But we are getting at an oversold state a little bit, the current state of the market. Can we just go higher? Of course. Obviously, overbought, oversold is not a buy and or a sell signal. So we need to be careful, use caution, and use our trading plan, utilize our trading plan for our benefit, obviously. So you can see that we're here. I think we're going to be pushing up back again. When I want to see the 80, 90, we're coming into these areas, these value areas that are interesting, that we might be looking for some sell signals, which I'll show that to you in the indexes, okay? Let's take a look at the spiders. So we're here now, and we're at 193.56, which is support, and right up in this area we've held. You can see we really haven't gone anywhere. We popped up, and then Friday we rallied, we sold off a little bit, and then here we sold off in the afternoon, and now we're back up again. So we're chopping around here, creating some sort of a midterm base. Now, I'd like to see this area hold at 196, which will come in about 1960-ish in the ES, which is about 15 handles away right now from the current trade. So we need to kind of see where we're going to go. Again, this is not telling us anything. Our indicators are moving up. We had some positive divergence off the lows. But you can see we had 4 or 5 days up, and now we're just kind of chopping around here within this base. Let me show you the 60-minute chart. You know, it's a little bit clearer. We did fill these two gaps here. We still have these two current gaps that will need to be filled. And you can see we're starting to roll over in our MACD and our RSI. You can see that clearly from here. We've already crossed to the downside. So I am looking for some downside. Now, again, we could pop back up again and hit that area of resistance and start to sell off. But we need to lose this area here. This is going to be the key area that we're going to need to lose, which comes in around 193.45, 193.40. Right there, right on the close. So we're not going to do that on the opening, but we could see what happens if we start to roll back again. Then let's see if we could test these little areas to the downside. At one point, they are going to get filled, and these are gap areas of support for now. So you might want to write this down, 187, 186, and then 184 down to 182.90. I put a full Pro Trader Premier video, which is a subscription, but I get accurate levels in the shorter term time frames to really that you guys can trade during the day. So check it out when you get a chance. All right, so let's take a look at the weekly transportation ETF with the IYT. You can see that big massive head and shoulders. We did break down. We hit our first area of 118. Target area on the head and shoulders overall will be 108.50. We were flagging. We broke out of that bear flag, and now we're kind of back testing the neckline again. So we're just above the 200-week moving average, which is a good sign. But again, guys, still a very ugly chart. You can see clearly that we're still making lower lows and lower highs here, and this could actually come right to here, and we would still make a lower low, lower high, and then start to sell off again. So to me, this is nothing more than just a retracement, dead cat bounce rally, okay? Weekly, you can see we're in an uptrend looking good. Daily charts look more bullish, obviously, than weekly charts, but just keep that in mind when you're trading. Remember, make this useful not only to your longer-term objective, but also for your day trading, right? So if you want to see the short-term right now, we're kind of iffy. So keep that in your mind saying, okay, well, the daily charts really, they are a little more bullish, but right now where the current state of the market is, we're not really telling me that we're going to go higher end or go lower. So for you, when you're trading for the intraday trade, take the profits a little quicker is what I'm saying. That's what I like you to how to use these videos, you know, if you're day trading. All right, and the transports, you can see the daily chart, we're in an uptrend making higher highs and higher lows. I do believe at one point in time we're approaching this area of resistance, and I'll just put that horizontal line here. You can see that clearly. This volume zone, yeah, there is a thin zone. It's the same thing as it is going to the upside. So we could flush and we could bring all the way back up here. But you can see here how this area is pretty valid, touched here, and now we're back here again. So we're coming into some good resistance, which this is where I think we should hold. Even if we popped out and we move lower again, and we start to make lower lows, lower highs, then I think the markets are back in track to move lower again. But right now, we haven't seen that. IBM Weekly, IWM Weekly, the Russell 2000 ETF head and shoulders pattern measure down to 89.22. You've seen this before. And what do we have here? We just have basically a nice, really uptight, really bear flag. You could see here. All right, and there's your bear flag pattern. But this didn't even get to the 200-week moving average. So this is deemed our secondary leader in front of, besides the transportation sector. So we got to watch this, because if this starts to break down and starts taking out the previous day low, then I think we're in trouble. And you'll see this IWM eventually hit this target at 89.22. So not really looking too good on a weekly. And the daily actually is just basically tagged at 50 for now. It had a pretty good couple of days. We did get a small little doji on Friday. Monday we closed on an outside day, so that's not a bad thing. But again, guys, you can see the charts are very, very ugly here, and we do have this thin zone, so we could run up all the way up to 107.50. But we need to take out that 50-day moving average first, okay? Diamonds daily, you can see very sloppy gap up, and that's what happens when you have volatility. We still got to get to that 200-day moving average, and you can see here. That's going to be the really bigger target, would be that 200. You could see that horizontal trend line, and here's that little thin zone area. And then above that, we'll challenge the highs. But remember, I mentioned a lot of longs trapped up in this area here. Okay, so once we get back up, I would assume that sellers will come back in and sell that area to get flat. Okay, and they're not worried about making money at the time. They're going to look to just get flat. All right, and this is, again, KOS Daily. Again, guys, you can see here we have a decent area. This is going to be support. I'll take that out right now, and I'll just mention that support area. And then this is what we're looking for, and this is what we're going to need to hold here is 102.70. If not, we'll flush down to that 97 area. And again, we're not overbought in our RSI at all, and that's a good sign. But look at the volume. There's no volume. Volume actually diminished on the way up, which is not a good sign at all. So remember, guys, don't fall in love with the upside at the moment. Let's really get some conviction that we're indeed now breaking up to the upside, okay? Hope it helps, guys. We'll see you tomorrow. Take care.